The title of this show, Jacob, is Old Warren Buffett. So when does a man get old? I ask myself that every day.
Not yet. Not today.
Yet. We did a whole show on young Warren Buffett. He is 95 years old as of this recording. So somewhere in there, he became the man he is today. To recap our last episode on young Warren Buffett, this weird kid who had obsessive hobbies, becomes an investor in things that they called cigar butt companies. He found tiny companies that were worth more than they appeared by their stock price, would buy that stock, wait for the pop,
and then sell it.
And then
Very different than the Warren Buffett we know today.
Yeah. And in the last episode, he buys a textile mill, Berkshire Hathaway, which then becomes his holding company for all these other companies, insurance companies, products, all sorts of
That's
things.
the transition into the Buffett we know today. He's not buying and selling by the end of the last episode. He's buying and holding.
And he's starting to think about these big American brands, Coca-Cola, Gillette razors, Dairy Queen, right? You can't get more American than that. So today we're going to talk about Warren Buffett's superpower that he really leveraged in this sort of second half of his life. And that is that he was now famous. And this is the fundamental thing about Warren Buffett. Regardless of the decisions he makes by himself late at night when he's deciding which companies to buy, he is a man who is now famous for being brilliant, famous for being an investor, famous for being rich, famous for being folksy and all-American. And that wasn't just a result of his decisions. That was the way he ended up making so much money, his fame.
The Buffett premium.
We are going to start in 1983 because this is the first time that Berkshire Hathaway has an annual meeting that you might recognize today. Annual meetings are traditionally very boring, and back before the 1980s, like no one went to them. Like maybe some old retirees and some people who work for the company.
Maybe a mutual fund manager trying to look busy.
Yeah. So famously, the Berkshire Hathaway meetings used to be in a loft in the mill in New Bedford, Massachusetts. There's a story about like it sort of ending early because people just wandered away, right? He eventually...
meeting adjourned.
Buffett eventually moved the meetings to the National Indemnity Cafeteria in Omaha. That's an insurance company he owned. And in 1981, only 22 people showed up. But in 1983, people were starting to hear these stories about this famous investor, Warren Buffett, right? He was close to being a billionaire at this point. And a crowd, few hundred, show up at the meeting. And Buffett gets this chance to do what he's done one-on-one for most of his life, which is to kind of hold court, to talk about his philosophy of life and investing.
Would you say he's dispensing folksy wisdom?
Dispensing folksy wisdom. Yeah. This is in the first graph of coverage of the Berkshire Hathaway shareholder meeting in perpetuity, right? People are traveling across the country to see him. Eventually, they would, fill auditoriums and then arenas. People would start to like dress up as Warren Buffett. They would read poems about him, sing songs. He became this American brand, just like the brands that he loved, like Coca-Cola and Dairy Queen. So as part of this episode, I'm going to tell you the story of how Warren Buffett leveraged this fame. But I also have in my hand a collection of folksy wisdom that I'm going to make you read through this episode. You can shuffle them. You could pop them in whenever.
So
you are
handed
Warren
me
Buffett.
A stack of index cards, each of which has a pithy piece of folksy wisdom from Warren Buffett.
Wisdom,
little
right?
Buffett quotes. I'm going to lay them out before me, and I'm going to pull from them as appropriate during the show.
Love it. In the mid-1990s, the annual Berkshire Hathaway meeting gets moved to the Coliseum in Omaha. This is when they start calling it the Woodstock for capitalists. 10,000 people show up. Then 20,000 people show up 10 years later. People are dressing like Warren Buffett, reading poems about him, painting pictures of him, trying to give him gifts. They're buying products and souvenirs at the Berkshire Hathaway meeting.
And the products are Berkshire companies, right? They're buying See's candies and
exactly.
Dairy Queen dilly bars.
Exactly. Yeah. And at the center of it is Warren Buffett just answering questions off the top of his head, preaching this Buffett way, right? And there's
Rule number one is never lose money. Rule number two is never forget rule number one.
Love it. There's this great quote that Buffett gives in the book, The Snowball by Alice Schroeder, that sums up his attitude to this whole thing, right? I was at my best at giving financial advice when I was 21 years old and people weren't listening to me. I could have gotten up there and said the most brilliant things and not very much attention would have been paid to me. And now I can say the dumbest things in the world and a fair number of people will think there's some great hidden meaning to it or something.
This is insightful, but not so insightful that he stops pontificating.
No, because this was his new competitive advantage.
Uh-huh.
And it turns out a little bit of a curse. I'm Robert Smith.
And I'm Jacob Goldstein. This is Business History, a show about the history of business.
When we told the story of young Warren Buffett, it was the story of, a crafty man using research and math and hard work to make millions of dollars. But old Warren Buffett's a little bit of a harder story because he sort of starts with $1 billion and just continues to get richer, right? And he is also a man at this point who is making his own weather. He doesn't have to be smarter or faster. He may be, but doesn't have to be because he is Warren Buffett and people just want to do business with him. They want to be part of the magic. So in the 1980s, Buffett's already putting together this whole empire under the brand Berkshire Hathaway. He has the insurance company generating cash. He's got See's Candy. Have you ever had See's Candy?
I have, yeah. My step-grandfather used to give me a box for Christmas when I was a boy.
My grandparents too. And there are these lovely boxes of fancy chocolates. Half of them are disgusting. You just don't know which half.
You don't know, right? They could put a map. I don't want the cherry. Nobody wants the cherry. I just want the
with the
chocolate
fruit-flavored
cream.
nougat.
No fruit.
No, don't put the fruit in there. But old people love it. And it was a great, successful American company, right? He has a couple of newspapers at this point. He's got a bank. He owns some of ABC, the TV network, Geico Insurance. So he is very successful and very rich. But this is the 1980s, right? Go. Gordon Gekko, right? Is that his name? Gordon Gekko, Greed is Good, right? The movie Wall Street. It's all about financial innovations. We're all going to be rich.
We're not all going to be rich in Wall Street, for the record.
Yes.
The Wall Street people get rich in that movie.
We're going to be rich. Yes. And that guy in Omaha, he doesn't really know what he's talking about, right? He doesn't believe in borrowing vast sums of money. He doesn't believe in junk bonds, any of these things, right? You just can't buy and hold. This is the 1980s. And this is also the era where finance professors are starting to put forward something called the efficient markets hypothesis, which you and I know well.
Yes. I mean, it's basically the idea that in a big liquid market like the U.S. stock market, the price of a stock today reflects the true value of the company. And obviously that's not true every day, but in a simpler form, it means you can't do what Warren Buffett does. You can't look at a stock systematically and on average beat the market.
Because the price is the price, and that reflects all the information. And unless you have insider information, which Warren Buffett never claimed, essentially, you can get lucky.
Yeah.
And they would say at this point, the professors, and they did say, Warren Buffett was just pretty lucky. He made some lucky calls over the years.
Well, or also, as we talked about in the last episode, he came along at a time when the market was less efficient.
Yeah.
And he focused on the even less efficient aspects of the market, right? Remember, in the last episode, he's buying companies that are not even traded on the New York Stock Exchange at a time when fewer people are paying attention. And so I think clearly those markets were inefficient, and he was exploiting those inefficiencies. Now it's the 80s. So not only is the market more efficient, but Buffett has to deploy so much money that even if there is some weird little bus company in New Bedford, Massachusetts, it's too little for it to move the needle for him, right? He has to be playing in this big, efficient market.
Yes. And more than that, the finance professor should have realized one of the reasons why the market was efficient was Warren Buffett.
Yeah, right. He showed,
and he closed those arbitrage gaps.
Yeah.
So absolutely. But, he's still people are looking at him. Even his method of using mostly cash to invest in whole companies and holding them just feels out of date in the 1980s because this is the age of the leveraged buyout. You don't use your own money. You borrow massive amounts of money. You raid a company that doesn't want to be sold, right? You use that debt as leverage to pry the company away from the owners. Then you take that debt and you shove it down the mouth of the company.
Wow.
And then you take out a cleaver and you chop up the company into little pieces and sell it all.
Yes.
Yeah.
Wait, am I supposed to like that or not like it? I have a complex emotional response to that.
I don't know. I just got carried away into the 1980s, right?
Yeah.
And like Buffett would definitely borrow some money to close deals, but like he thought debt was terrible, that you would be overladen with debt. He once said, I should have given this to you, right? He once said, debt is like gasoline, makes the car go faster, but it causes an explosion when you crash.
I mean, in that metaphor, debt seems totally reasonable. Like, I drive a car, I put gas in it, I just don't crash.
Just don't crash. There you go. And, Buffett, like, he was not a big breaker up of companies, you know. He just wanted larger and larger chunks of Coca-Cola. Grandpa.
If you weren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes.
Exactly
Warren
right.
Buffett.
Exactly right. Yeah, I mean, Buffett wanted companies with a durable advantage, ones that could make money for long periods of time. But the 1980s were about to test Warren Buffett and this theory, right? So we have the wild things Wall Street are doing. We have the leveraged buyouts. We have the finance professors doubting Warren Buffett. And the first crack really appears in 1986. So Warren Buffett gets a call from John Gutfreund of Salomon Brothers. He's the CEO of Salomon Brothers. And
he's the guy in Liar's Poker, right? Like classic
right.
80s Wall Street guy.
Yeah, and Salomon is a huge investment firm at the time. They specialize in bonds, and they're part of this go-go Wall Street thing in the 1980s. But at this moment, they are in trouble, right? Because all these leveraged buyouts are happening, right, out in the real economy. And all of a sudden, Salomon Brothers itself, the investment firm, is targeted for takeover by one of the raiders, Ron Perelman. And, like any
raider
company,
on raider action.
on raider violence, right? And, the thing about being raided by another company is you start to think, I'm not going to have a job soon. They're going to come in and fire everyone in the company.
Certainly if you're the CEO, you're thinking,
Yes.
I'm not going to have a job soon.
So the CEO, Gutfreund, is panicking, and he calls Warren Buffett, who he knows from previous deals, and he's like, help. I need a white knight. I need someone to come in here with a huge investment, a lot of money into the company, who will basically be a big sign that says, like, stay away. Like, sure, you can take on Salomon Brothers, but you can take on Salomon Brothers and Warren Buffett? I don't think so. Now, this is not normally the kind of business that Warren Buffett likes, right? Because they don't make something that an average American can buy at their corner store, right? I used to call investment firms casinos. Like, he just didn't like Wall Street, right? But he likes the CEO, and he sees a desperate firm willing to make a really good deal, and they make an amazing offer. They essentially structure a deal so that he gets stock in Salomon Brothers, guaranteed 15% profit, whether the stock of the company goes up or down. That's pretty good, right? Yeah. $63 million a year in dividends. Like this is the kind of money he can use elsewhere, right? And Salomon Brothers, they just get the reputation of the great Warren Buffett. Now, apparently Warren Buffett shows up to make the deal, has no briefcase, no papers, it's just the handshake kind of thing.
Got a Coke in one hand and a dilly bar in the other.
Exactly
smile
right.
on his face.
And then he will soon regret. He will soon regret this deal because in 1991, there is a rogue bond trader.
Yes, I love a rogue trader.
A little explanation.
A rogue. They always call him a rogue.
Yes. Yeah, right? It's kind of rakish.
Yeah, rakish bond trader. It's worse than rakish.
So Salomon Brothers was a big dealer in treasury bonds. And the way treasury bonds work, they're the way that the U.S. government funds its business, obviously, right? Billions and billions of dollars worth. And they don't just sell them to the public. They sell them to the most esteemed firms on Wall Street. And those firms sell it to the public.
The primary dealers.
The primary dealers. And Salomon was one of those. And in order to make it fair, there was this rule that one firm couldn't outbid all the other firms and sort of corner the market on treasury bonds for any certain issuance, right?
Okay.
So essentially, everyone was supposed to put their bids in for the treasury bonds from the government and divvy them up among themselves, depending on what their bids were, right? So this trader at Solomon gets this idea that, like, well, they're not really watching. I could sort of create some fake buyers and like engineer this so that the government doesn't know that we're buying all the treasury bonds. And at one point, he gets like 87% of a certain issuance. And if you're somebody who has 87% of anything, you can kind of set the price.
Right.
You know, it's just a little bit of a cornering of the market play.
Yeah, it's funny because you think of like treasuries as the most boring, safe thing in the world. The idea that a rogue trader is going to be monkeying around there is interesting.
And really scandalous.
Yeah, because this treasuries are the safest investment in the world.
Safest thing.
They're like the bedrock of the financial system.
So he gets caught. I believe the treasurer of the Fed sends like a letter on this. People know all the way up in the company that this has happened, but they decide not to fire him. They say it was a mistake. They said he shouldn't have done it, right? It ends up being this sort of massive cover-up. And the government is pissed.
Yeah.
Like they are threatening to take away this primary dealership from Solomon. Basically, it would say the U.S. government doesn't trust you as an investment firm. It would be the end of the firm.
Yeah, right.
So the CEO resigns. Everyone's implicated, except
yes,
the old
our man
guy
in
sitting
Omaha.
in Omaha.
Yeah.
And he's the second richest man in the world at this point. He's got things to do. You know, he's got Coca-Cola shares to buy.
He's got to go eat hamburgers.
He has to fly to New York, a place he doesn't really like, and take over running Solomon Brothers, a firm which he doesn't really respect or trust.
And this is a guy who, in a way, never wanted a job, right? Like he's done all this to be rich and not have a job, but now he has to have a job.
This is such a job. And he goes to the Treasury Department, and they're talking about, you know, this sort of death sentence for the firm, saying we are going to officially say that we don't trust Solomon Brothers. And he says, you know, I have technically not signed the papers that I will take over as CEO. So I can just go back to Omaha at any time. And then all of a sudden you have basically the greatest financial disaster in history unfolding under you. And I'm going to go back and eat
he's
dilly
playing
bars.
the Warren Buffett card now with the U.S. government.
Yeah.
He's saying, do you know who I am, U.S. government?
Yeah.
Yeah.
And they're like, okay, like we want you to rescue this company because we don't want to have to rescue this company, right? And they end up putting Warren Buffett through the ringer. He's got to testify before Congress. He's got to remake the management of the firm. Not a popular guy on Wall Street at this point because he's cutting pay for the traders. He cancels everyone's magazine subscriptions. He just thinks like they're spending way too much money. He's being the frugal Warren Buffett, which remember, you know, this is Wall Street.
Wall Street in the 80s, yes.
And, you know, he
cuts the cocaine budget.
Exactly. It's terrible. And he tells the workers at Solomon,
wait for it.
You got it.
Lose money for the firm and I will be understanding. Lose a shred of reputation for the firm and I will be ruthless.
Eventually, Solomon Brothers gets bought by someone else. Buffett can get out. And to be clear, he ended up making a bunch of money on the deal, as he always does, right? But he would be sort of gun-shy about this, lending his reputation to another business for a long time, right? And over the next few decades, he would get the call. The first place you turn when you're like, oh, we screwed up, we're about to go out of business, there's a run on our bank or whatever, we need to call Warren Buffett.
We need a smiling grandpa face on that building.
So in the late 1990s, there was a firm called Long-Term Capital Management.
I heard of it. Amazing
Spoiler,
story.
not long-term.
Hey!
They were a company staffed by brilliant Nobel Prize winning, right?
Yes.
Economists who thought they had figured out all these global arbitrages. And then there's the 1998, was it the Russian currency?
Russia. Well, and they were highly leveraged. They'd borrowed a ton of money. Yeah. This is the gasoline in the fuel tank blowing up moment.
Ring, ring, ring. Yeah, Warren Buffett, would you like to buy everything we own and save our company? So Buffett made an offer to save Long-Term Capital Management, but he had pretty strict terms. He's like, I'm going to buy all your assets for very cheap, and you all need to leave the company. And they didn't like that.
I'll give you a little money and you're fired.
Yeah.
How about that for a deal? No, thank you.
A consortium of investment firms had to sort of bail out Long-Term Capital Management and save the global economy. So Buffett did not like this role of savior, But at this point, Warren Buffett is sort of facing this bigger existential crisis, which is as we move into the 1990s, we're about to hit the age of computers and the internet and high tech. And Warren Buffett, he doesn't even know how to turn on a computer.
Wait a minute. Never invest in a business you cannot understand.
And understand it, he did not. Yeah, I mean, he didn't want to use a computer, right? He lives in an analog world. He gets the Wall Street Journal, I was going to say every morning, but I think he had a deal to get it the night before.
Yes.
Delivered, and he would read it from beginning to end. He liked to read papers and magazines and annual reports. This is the Warren Buffett, right? And everyone kept telling him, oh, you should really get a computer. It's the next hot thing. When I say everyone, I mean like Bill Gates. Like he was friends with Bill Gates, which is sort of unusual, right? An older man, younger guy, but
they played bridge together, right?
Yeah,
they played bridge.
And they just love to talk about business. They really hit it off. And Bill Gates is always like, well, you might want to use a computer. Warren Buffett's like, no. And then, of course, like people would pitch him like, you need to buy these .com stocks, these high-tech stocks.
Microsoft.
Or even Microsoft, really. I mean, Bill Gates came to him about this. And Buffett said, like, I don't understand how it works, so I really don't want to do it. He eventually got on the internet for a funny reason. He loves to play bridge, and one of the professionals he was playing bridge with was like, you could play bridge anytime, day or night, with people around the world. So I imagine there was a time when if you were playing bridge online, you might have been playing against, I don't know, WB7712, might have been Warren Buffett, right?
I like that for Warren Buffett, the internet is just basically like a bridge video game.
Well, it's funny. Someone had pointed out to him that, like, for a lot of people, the internet is just a way to do something they really want to do. And like that is the strength of it. So hopefully at this point, like he's sort of seeing this, but he is still not going to pour money into .com stocks or into the tech business at all in the 1990s. And we know where this story is going. There is a crash coming. The stock market is going crazy. Valuations are up. I think, the NASDAQ went up 70, 80% in a year. Like it was just insanity. And Warren Buffett's stock, Berkshire Hathaway, is kind of like not doing so well.
Underperforming.
Underperforming at least everyone else, right? This is what's going to happen in a bubble. At one point, there is a rumor that Warren Buffett has died. The rumor was started on an internet bulletin board on Yahoo. Someone used the moniker ZX1675. That guy.
Sounds credible.
Yeah. And he posted, Warren in hospital. Critical. And here's Warren Buffett, hasn't even seen the internet, right? Berkshire Hathaway stock plunges. They have this like policy. They don't comment on Warren Buffett or anything, but they had to like put out a thing that said like Warren Buffett's fine. He is alive, right? But even after they debunk it, the stock is down like 11% for the week, right? And by the end of the 1990s...
Better that it goes down on rumors of his death than up. I was a little nervous you were going to say they said he died and it went up. Right? That would be the really bad sign.
No. I mean, they still, like the people who trade in Berkshire Hathaway stock need Warren Buffett, right? At one point, he looks back on a year or two and he's done worse than the S&P index.
Yeah.
Which
the
happens
S&P
to a lot
index
of
was
companies.
Going up a lot at this time, driven by tech stocks.
So there's this legendary moment in 1999, right? Buffett goes to this big conference in Sun Valley, Idaho, happens to this day. It's called like the Allen and Company conference, right? All the CEOs pour in. There's a lot of media types, high tech, right? So
they all wear vests. And weirdly, like part of the Allen Sun Valley conference is got to be some kind of photo op. Because like if you see a picture of Jeff Bezos or Rupert Murdoch or whatever, like it is usually from there. Like, it's a phenomenon that I don't understand, but I have observed for years now. It's like a low-key red carpet for billionaires.
Yeah, and they look good with the mountains behind them. The heads of Microsoft, Apple, they're all there. Warren Buffett is the final speaker. So in this book, The Snowball, there's this long thing about, he's got to set up his presentation and everything. Not a big computer guy, right?
He's not setting up his own presentation. He's not talking to the AV guy. I know that.
So he looks out and he says to the CEOs, many of which are very rich from this bubble, right? There is no new paradigm. This time is not different. This is a bubble fueled by greed and baloney. And Warren Buffett loved baloney, but he wasn't using it that way. He was saying, look, you only have to go back to history to see what is happening today. He says, look at the car industry, right? The car industry, huge invention, right? Mm-hmm. Maybe even bigger than the internet, right? The car, right? Changed the world. But of the 2,000 auto companies started, only 3 survived. So he's like, look, it was great for America, great for the world, but kind of miserable for investors. There's not a guarantee that a transformative invention is going to be hugely profitable for the people who invested in it. One more example he gives them, airplanes, airline industry, right? Revolutionary, transformative, travel through the air, right? But to quote Buffett,
you did this one in our Southwest episode, right? If a capitalist had been present at Kitty Hawk, he should have shot Orville Wright. He would have saved his progeny money.
His point here is whatever you all think about the internet, it can both be the world's best invention, and companies can still go out of business and still lose money on it.
This is the classic bubble story, right? Like, in fact, now when people talk about the dot-com boom, they talk about actually the fiber optics, right? These telecom companies that were laying fiber optic cables, totally overbuilt, put in way too many fiber optic cables, had horrible economic returns for their investors. But we as America had all this fiber optic cable that allowed the rise of the 21st century internet. A similar story about railroad tracks in 19th century England. Same story.
Yeah, and people would make money, obviously, off the internet to this very day, but it would happen after the investment, after a lot of people went out of business. And of course, we remember this speech in 1999 because in the year 2000, the bubble pops. A lot of these companies do go out of business.
And by the way, today, this is the way a lot of people are thinking about AI, right? Like,
exactly right.
There's a very plausible story, which is, yes, AI is an incredible transformative technology, but also a lot of these companies that are high-flying today will lose a ton of money for investors, especially those who are getting in at high prices.
Exactly right. So Buffett can now say he was right. He stood in front of these geniuses and he told them the way it works. They didn't listen to him. Mm-hmm. Or even better, they listened to him like, well, what are we going to do? We got to ride this up.
Yeah.
So there's a crash. And Buffett does what he did back in the 1970s. He still has money. And he looks at his stock, remember, which is like a little lower than he thought it should be. And so he says publicly, I'll buy it. If you have my stock and you don't want it, I will buy it from you.
So he's doing kind of the fundamental analysis of his own company.
Of his own company.
It's too cheap. It's a deal. Oh, I got cash. My company's a deal.
I will buy back your stock. And he doesn't really have to, because when people hear this, they're like, oh.
If Warren Buffett thinks it's a good deal.
Stock goes up 24%, right? Amazing, right? But this is also one of those moments, those buying spree moments that Warren Buffett loves, right? So now his share price is going up. He still has some cash. And companies, because there is a recession and there's been this bubble crash, companies are cheap. So he starts buying.
I got one.
Yeah.
Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble.
Love it. And he put out the bucket. He bought Benjamin Moore, paint manufacturer.
Sounds like a classic Buffett play.
Oh, this one's even better. Fruit of the Loom.
Sure.
Not
everybody
a fruit company.
Needs underwear, no matter how much the stock market goes down.
I know. If you're in recession, man, still sell underwear.
Not a fruit company. It's a loom company.
Exactly right. Buffett buys carpet maker, pipeline companies. So by the end of 2007, the S&P index has suffered sort of a lost decade. If you invested, and I think this doesn't count dividends and such, but if you invested at the beginning, 10 years before, your stock has gone nowhere over a decade. But Berkshire has gone up 12% a year. Boom.
Lesson from first decade of the 21st century? Courtesy of Warren Buffett. Be fearful when others are greedy. Be greedy when others are fearful.
We may need that one soon. I'm going to keep that one. So during this time, Warren Buffett's also doing some clever things with the company itself, or at least unusual things, I should say. One is he never lets the stock price split. Now, to explain this, oftentimes when a stock goes up to $200, $300, $400, they'll say, oh, we are basically giving you 2 shares for every 1 share. So now instead of one $400 stock, you have 2 $200 stocks.
Basically just because it makes it easier for people to buy shares in the company. Simple.
Easier, absolutely. Yeah. It doesn't mean anything economically, really. Warren Buffett's like, no, I'm not going to do that, right? So the Berkshire stock, which I guess if you go all the way back, started at $7.50 a share, right?
Kind of a normal share price.
Yeah. As of this taping, the Class A shares of Berkshire Hathaway are above $715,000.
Per share, for one share.
One share or a house. Like that's your choice.
Why? Like, it seems kind of counter to the, like, folksy, normal guy, rational guy. Like, why does he do this?
When he is asked, he says that a low share price encourages short-term investors, and he doesn't want people going in and out of his stock. He wants to kind of almost keep it as a club. And at that point, it is sort of like a club of people who are invested in the company and don't want to sell it. But I think it's also just like a weird ego thing. That as he looks, I bet it's up on his computer now, he uses computers, his share price every day is a symbol of like everything that's happened over the last 50 years in one number.
Yeah, I mean, in the last episode, you were talking about how he kept the name Berkshire Hathaway, even though it was one of his worst investments, as like a way to be humble. This is sort of the opposite of that. Like, if he's feeling too humble, he just looks at the Berkshire share price. It's like, oh, I'm doing all right.
You'll like this. When the share price started to get so big, a number of enterprising investment companies were like, well, wait a minute here. What if we just imitate the shareholdings of Berkshire Hathaway, do everything that Warren Buffett does, but offer shares at like a cheap price, essentially a more manageable price, I should say. And people were doing this, and Warren Buffett was like, oh, they're making fees and all this sort of stuff off of my investment ideas. So he creates the B class of shares. And these are the democratic shares that anyone could buy. In fact, he said he would print as many as people want because he didn't want like their scarcity to go up.
Well, that's the way normal stock works.
Yeah.
Like they split the stock if the number gets high.
Yeah. So these people can then go to hear him talk at the Berkshire Hathaway meetings, right? Yeah. Right. And it was enormously successful because it was like, first of all, symbolic of this, American democratic company that everyone should be a part of. And also it allowed dabblers to buy some Berkshire B stock.
Sure. Dabblers are just ordinary investors. Like Berkshire B is just a normal stock. The weird one is the $700,000 one. I mean, presumably the $700,000 one, not only is it good for his ego, it's good for his brand, right? This whole thing of like, he's profitable because he is Warren Buffett, like that a single share trades for $700,000 burnishes that brand.
As we look back in sort of recent years, Warren Buffett just keeps finding these companies that you didn't even think of, but they're just everywhere in your life, right? Burlington Northern Santa Fe Railroad, he buys that. Brooks Running Shoes, which I'm a big fan of.
Classic dad shoe.
Yeah, absolutely. In fact, a postal worker stopped me the other day and said, what are those shoes? And I'm like, is that a compliment?
Yes. That's in New York. That's a person who walks for a living.
Exactly right. Yeah. He buys Heinz, of course, of ketchup fame, and Kraft of macaroni and cheese fame, encourages them to merge, and that doesn't work out well. And I think they're breaking apart now. Buys Duracell, like the battery company. And eventually, very famously, he hops into a tech stock. He hops into Apple. Huge investment in Apple. He's recently sold some of that. Recently sold a lot of it.
But Apple, he buys Apple relatively late in the life of the company.
Yes,
and it actually makes sense as a Buffett stock, even though it's a tech company, right? Clear moat. That brand is a clear moat, right? You can have a Dell laptop or an Android phone, but Apple can sell its products at a premium price year after year. Like that is the Buffett thing.
And And Apple iPhone is just a thing that everyone has, like the running shoes or Dairy Queen, that sort of thing.
Yeah.
And even the story of Warren Buffett as white knight, that also keeps happening. In 2008, during the financial crisis, he gets a call from Goldman Sachs. At the time, everyone is panicked about everyone. I won't say there was any particular problem with Goldman Sachs compared to the other investment companies. But Warren Buffett invests $5 billion. They hang a big poster of Warren Buffett up on the building. Not really, but kind of metaphorically. That says, oh, you think Goldman Sachs is one of those slimy Wall Street investment firms? Oh, no. We have Warren Buffett.
By the way, a striking thing to me in the financial crisis was that Uncle Warren, Mr. Squeaky Clean, had also owned a huge share of Moody's, the ratings company, that was, I would say implicated, like not criminally, but, they were one of the key people who put these AAA ratings on bad mortgage bonds. And Buffett was there too, and yet never sort of got tarred with that.
It's interesting, right? So he makes $3 billion from the Goldman Sachs deal.
Yeah.
There's the Moody's thing. He has made missteps, many missteps.
Yeah.
But I don't know if it's just his demeanor or the amount of successes he's had, but like the press kind of gives him a pass on just about everything. And I mean, the amount of money he's made for his investors over the years, I guess it makes sense. You're willing to forgive a few missteps.
And I don't think it's just the money, right? Like, he hasn't used a crazy amount of leverage. He never blew up. He never needed to be bailed out. He invested for the long term in, things that people find useful. I have an iPhone. It's a good company. You know what I mean? Lots of people drink Coca-Cola. Like, he is sort of the opposite of the caricature finance villain who is just playing weird games and not doing anything for the real economy. Like, I think that is valid.
And this brings up the question, what happens now? At his last giant meeting, I think 40,000 people came to Omaha for the Berkshire Hathaway annual meeting. He announces that he's stepping down as CEO. He'll still stay on as chairman, but his last day is December 31st, 2025. And it's a really interesting time for him to leave, right? We're seeing another perhaps bubble in tech stocks, right? He has sold a lot of Apple and other companies. So Berkshire Hathaway has a big pile of cash, starting to seem like the 1970s and the 2000s all over again. They are poised to perhaps, if something bad happens in the stock market, to go in and make like these huge acquisitions. Like he'll be able to do pennies on the dollar for a data center, let's just say. Maybe not, right? And he's not there to do it. So the question is, without Warren Buffett there, does the philosophy of Berkshire Hathaway and all their natural advantages, does it succeed? They'll have the money to deploy. They have the ideas. They have 1,000 quotes from Warren Buffett about how to do it. But they don't have the man himself. And we'll be able to see, like, what does that mean? Remember, Warren Buffett is getting personal phone calls when good companies are for sale or when bad companies need help. That's a one-on-one phone call. They're not calling the company. They're calling Warren Buffett. We said how the press gives Warren Buffett a pass. Regulators kind of do too. Like, he just has a lot of goodwill, right? And then there's this like interesting sense that like Warren Buffett was there as this like symbol during difficult times when you have lost money on tech or some bubble or something, like you kind of want to go into the warm embrace, of a cushy Warren Buffett being like, here, have a Dairy Queen treat and some Coca-Cola. Like everything will be okay. And now we're going to see, right? We'll see how much we miss Warren Buffett.
I mean, you're doing the time will tell ending, but the thesis of this show, as I hear it, is like, this whole last several decades, the whole second half of Buffett's career was trading on Buffett the man, Buffett the persona, let's say. He's 95, he's stepping down as CEO, he's not going to live forever. Like, as I read this show, as I listen to what you're arguing, like, Berkshire Hathaway isn't going to be able to keep making those moves after Buffett. That seems to be the argument this show is making.
I don't know. I mean, it's good to have a lot of cash. And it's good. They have very smart people, and he's put very smart people in charge. And I will say there was a tiny little note that I saw somewhere, which was although he's no longer CEO, he is still chairman of the board, and he might still be a little involved in times of great opportunity.
He's 95. Those times better come soon.